Aloha everyone, Joshua Hayes at bigwavetrading.com. I want to make it very clear right here. This is why, for me, a signal is a signal is a signal is a signal. I've managed to get myself not all the way back to fully invested. I'm about 15 to 20% cash still. But since these lows here, I took my long signals every day as they appeared. The vast majority are working along with every single new long position I took this weekend. So with all that in mind, am I raging bull right here? Absolutely not. Guys, this is a terrible rally attempt. It's horrible for now. It can get better later on, but for right now, I do not at all understand the bullishness that some people that I know have out there. Some people are trying to show me patterns like WDC, and they're trying to convince me that this is a healthy consolidation pattern. Guys, I've been around way too long. That kind of trading is not good. Tesla, that is not a good base. I am sorry. Apple, that is not a good base. If these things do break out and continue higher, they are going to definitely come back into those previous ranges. Look at how every other one went. Breakout, back into the range. Breakout, back into the range. We will not be able to hold these breakouts if the market continues to rally here. So help me God. I am not the greatest trader in the stock market, but I will stand by my chart analysis 100% in saying that I, after all of these years, definitely have a beat on the overall market and technical analysis over a lot of other professional traders that I even see out there. I know my charts. I wish I could trade like some of the greatest traders. Like I wish I could find a stock and be like, oh, yeah, I know for a fact this one's going up 20%, all of my capital on margin, boom, goes up, boom, we make a winner. I don't know that. You can supersize my methodology by whenever you go long something, if it moves lower immediately, cutting all your losses. But if you go by my methodology and trade it more aggressively than me, you could have a FT and W 140% gain in 2 months without having any losses in a pure nice uptrend. Or you could have gone long CERC back here with my long signal and now be up 203% on your capital. So it's possible using my methodology to get extremely rich based on my selections, the stock charts that I pick. It's not possible for me. I'm too risk averse. Too much bad shit's happened in my life that I'm just extremely careful overall in the stock market based on what's happened in my personal life. I don't know if I'll be able to psychologically get over that hump ever again, but I'm 100% sure I know when I will, when everything in the market lines up. And right now, folks, SPY rallying here on lower volume without any real pullback. This is a move meant to suck in the gamblers, the chasers. Don't forget this saying, and this every professional poker player knows this. Those that chase straights and flushes go home on Greyhound buses. When I play poker, you can be 100% sure. Well, first off, so I'll never play you now that I'm telling you this. I will never, ever chase a straight or a flush when the pot odds are against me. Ever. It's just ingrained into my whole entire being. Same with the stock market. Rule number 1, always cut your losses. Rule number 2, hard rule learned over all these years of trading. Never chase. Never, ever chase. So if you decide that, oh my God, I'm missing out on the rally, I got to buy here, you are chasing. You're going to get suckered in. If you want this market to continue to move higher, and I'm okay with it moving higher, I would love for it to move higher with better setups, you better hope we start consolidating now. We don't have much more time until we go into the bullish seasonal pattern of March to May. And if we don't consolidate ahead of there, it's possible we're just going to do the opposite of what seasonality wants us to do. So keep all of that in mind as we move forward. If you think that the market was so good today with the SPY moving it is, why is BOP going the wrong way here at the bottom of my screen? Why is the DIA back to being red with the no accumulation on the upside? And while the QQQ is hitting new highs, where's all the accumulation? You don't think that all of this selling and then moves higher is smart money selling out to the retail crowd as we go into the final innings of this bull market that started in 2009. Everybody that wants to buy stocks here for the first time that I meet in my life, I say one thing. Where were you in 2009? Interest rates are going to be raised 3 times this year. They're looking to be raised at least 3 times next year. How is that not going to invert the yield curve? Has a recession ever not followed a inverted yield curve? No, it's always followed. There's always been a recession following an inverted yield curve. So how does this yield curve not invert? So how are we not near the final innings? It just blows my mind, all the people that feel like they should just jump in this market now. So if you chase up here, you're a gambler, you're chasing a straight and flush, and while you might be right for a little while, for a 5 or 10% move, you're going to get caught in another one of these January to February, 1.5, 2 week, 10% declines. And who knows, the next time it might be 20%. So keep all of that in mind. Now, leading into the new long positions, I had a lot of 50% and 100% hedge signals that triggered. Those are all self-explanatory. You can see the support levels that they broke to become 50% sell signals. You can see the ultimate lows to become 100% sell signal like SQQQ, REW. But also, TLRA on a big up day, that stock failed today. SECO was a 50% sell signal today. CIFS failed today. So it's not, easy sailing. And CLAR, a close below the 200-day moving average on above average volume, that's a full sell signal, but I got knocked out of that thing way back in August. So I've been tracking it on an end-of-day basis for members all the way since then, but it's finally gone. But with CLAR failing, CIFS failing, TLRA failing, and SECO producing a 50% sell signal, it's not the most happiest big up day. I don't know why everybody's so excited. And with my chart patterns basically looking like WDC looks, that's basically the chart pattern that I have everywhere. I want this one. That's the one I want to look at. So with my WDC kind of looking charts everywhere I look, the Tesla, the Apple, the Microsoft, the price lines, the Googles, if you want to buy these chart patterns, go for it. I'm not. I'm going to avoid them. I'm going to stick to my nice chart patterns when they show up. And on that note, there was only 2, and they're not that great. GDOT, this was a former long position of ours. I was knocked out of all of it in February. It's a recent earnings winner. It's canceling quality, perfect speculator quality. It also made my new 52-week highs on above average volume scan and my price volume BOP surge scan. And BOP is heavier in the session before and the initial BOP surge day. So I am going to go long GDOT as an earnings winner. Limit order 66.47. My first cut loss right there, 65.34. My final cut loss right there, 62.99. And if this level goes before this level comes, just like on LPSM, I got knocked out of half of it intraday, so my final half is right here, but that final half now gets split up to where 50% is here, 100% is here. The same situation will apply to GDOT if it does not move up immediately. So keep that in mind. But total should have been a 6% position. But in this tape, being extended from the 20-day moving average, that halves it. That now makes it a 3% position. With it being extended from the 10-day moving average, that halves it. That now makes it a 1.5% long position. So GDOT is going to be a 1.5 long position, and that's going to be it. No more, no less. The other new long signal, RRR, this was in my price volume BOP surge scan. Very nice pocket pivot point signal, an increase in the green BOP from the previous levels. So this is a new long position. It's a very few charts that look like this. RRR's one, so I want to get long. It's actually a little extended from the 20-day moving average, as you can see. So once again, the 1% long signal is only 0.5%. Limit order 34.54. First cut loss right there, 33.11. Final cut loss 32.03. All right, I want to wrap it up. I want to try to keep this a little bit short overall. Folks, we better start consolidating, and we better consolidate on low volume. If we reverse on heavier volume, this is not a good setup yet. It needs more base building time before I embrace this uptrend. If volume was huge off the lows and as we rallied, it would be one thing. But with volume declining as we move higher, I have a lot of red flags out there that keeps me very cautious here. All right, keep those stops tight. Caveat emptor, everyone. Aloha.